Do you think that crypto could be due a massive correction? You don't own any, but you'd like to participate in any big moves to the downside. Are you someone who likes to trade cryptocurrencies? You're happy to take long and short positions, and now you think a cryptocurrency is due a major correction. The way to do it is to use options. Think of them as a kind of insurance plan. In fact, in this video, I'll actually refer to them as insurance just to keep things simple. We'll use Bitcoin as an example, but the principles apply to options on other cryptocurrencies too. Here's how it works. First, you need to be clear on the size of the sell-off that you think could happen. For example, maybe you think Bitcoin could halve in price. The second thing you need to work out is a time frame. This part is crucial. Will this sell-off take place in the next few days, weeks, or months? Time is literally money because you pay more for insurance with a longer term. The end date of the time frame you're looking at is called an expiry date. Finally, you have to decide what kind of insurance you want to pay for. Like any form of insurance, this is called the premium. And of course, the earlier you want to get in on that price move, the more you pay. So, do you want to pay extra to make sure you make the most out of even a small fall in price? Or do you want to pay less and accept that it might mean missing out on the early stages of the sell-off? Let's imagine that the price of Bitcoin will halve from $50,000 to $25,000 in the next 3 months. You have your price expectation and time frame, so you just need to choose what kind of insurance cover you want. You could buy the expensive insurance, which pays out if Bitcoin has made any kind of move below $50,000 by the end of your time period. Or you could buy the much cheaper insurance, which only pays out if Bitcoin hits its stride and goes below $35,000 by the end of the time period. We'll use some extremely simplified examples because the price of options are always changing. But let's just say that the expensive insurance costs $5,000 and the cheaper insurance costs $1,000. Before you decide, let me explain something pretty special. If you really are confident in your feelings about the sell-off to $25,000, you can actually buy more than one insurance contract. So given that you expect the price to plummet past $35,000 on its way to $25,000, instead of paying for one contract at $1,000, you could buy 5 contracts. Let's run the numbers to explain this in more detail. Your expensive cover costs $5,000 and will pay out $25,000 if Bitcoin hits your target price of $25,000. Your net profit is $20,000. Your cheaper coverage costs $1,000 and only pays out if Bitcoin goes below $35,000, giving you just $10,000 profit per contract when Bitcoin hits $25,000. But you bought 5 of these contracts because they were cheaper. Each one can pay out $10,000 if Bitcoin hits $25,000. So that's a total payout of $50,000 and your net profit is $45,000. You have spent the same amount on insurance, $5,000, but the potential return is $45,000 versus $20,000. That's a huge difference, which is why your view on Bitcoin is so important. The more confident you are about what might happen, the more you can take advantage of the opportunities on Ledger X. So what could go wrong? Well, Bitcoin could rally and you lose the premium you paid. That $5,000 would be gone. But that's all you could lose because the contracts were your insurance. Yes, it's frustrating, but it's better than being short Bitcoin only to see it rally to $75,000. In that scenario, you'd be sitting on a $25,000 loss and not a $5,000 loss. Now you know why it's referred to as a form of insurance. You were able to calculate your maximum cost up front, $5,000 in this case, while still giving yourself the opportunity to participate in a big sell-off. All you have to do next is your homework on how options prices can change over time and see if you can spot the catalyst for the next big price move. Because now you know one way to participate in an extremely sharp decline in Bitcoin. And all of it is made easy on Ledger X.